Indian economic updates.
India's retail inflation surged to a 9-month high of 5.5% in September, driven by rising food prices and an unfavorable base effect, according to official data. This sharp increase follows a 5-year low of 3.6% in July and 3.65% in August, dampening hopes for interest rate cuts. Food inflation soared to 9.24%, while wholesale inflation climbed to 1.84%. The Reserve Bank of India held the key rate steady at 6.5% but shifted to a neutral stance, signaling possible future adjustments. Core inflation reached 3.5%, while imported inflation grew by 2%, with rising costs of gold, oils, and chemicals. Escalating conflict in West Asia could further fuel inflation. The output of 8 core infrastructure industries shrank by 1.8% in August, marking the first contraction in 42 months, compared to a 6.1% expansion in July, according to official data. Heavy rainfall and an unfavorable base effect were cited as key reasons for the slump. 6 industries, coal, crude oil, natural gas, refinery products, cement, and electricity, registered declines, while steel and fertilizer showed slower growth. Experts estimate this decline could limit the August index of industrial production growth to 1 to 1.5%. Core sector output for the first 5 months of FY25 grew by 4.6%, down from 8% a year earlier. Recovery is expected in the third quarter as the monsoon withdraws. The centre's fiscal deficit for the first 5 months of 2024-25 stood at 27% of the annual target, down from 36% a year ago, keeping the government on track to meet its 4.9% of GDP target for the fiscal year. Between April and August, the deficit reached 4.35 lakh rupees crore, lower than 6.43 lakh rupees crore in the same period last year, helped by strong early-year resource collection and restrained spending due to the general elections. However, August saw a sharp rise in the deficit to 1.58 lakh rupees crore, driven by increased post-election spending and lower tax collections. Capital spending fell 30% in August, impacted by monsoon delays in project execution. Prices of biscuits, snacks, detergents, and soaps may rise by 6 to 7% in the coming quarter due to a 20% increase in basic customs duty on crude and refined edible oils. Refined palm oil, which makes up 12 to 20% of raw material costs for companies, is a key factor in this price hike. Additionally, rising input costs, such as wheat, are contributing to the expected increases after nearly 9 months of stable prices. Companies like Dabur and Britannia anticipate taking slight price hikes to counter food inflation in categories like tea, cocoa, and vegetables. Analysts predict that larger players will benefit from market share gains, as smaller companies may struggle to absorb these cost increases.